Guys, what's going on? My name is Ryan. I trade ETFs and I like to do technical analysis on the price action that I'm seeing. Today we've got gold, the commodity, and I've got to say right off the bat that I love doing my analysis and trading on GDX and gold itself just because there's so much controversy surrounding it, so many people on both sides, and only one side can really be right. And so it's very rewarding if you're able to be on the right side, and I think that you should come prepared with as much knowledge as possible. Anyways, also there's just very notable long-term patterns that you can see in the price action, and I have a lot of fun doing my off-screen technical analysis on this. So I've named this daily chart for gold as the battle for Matterhorn. What is Matterhorn? Well, it is this enormous mountain, and I've come to name this price action, this pattern that I see, as Matterhorns, and patent pending on the name, but I think it's very suitable. And essentially it's basically the sheer rise up to this cliff and this slow sloping move downwards, and then finally we break free and we have this all out dump to the downside. And we see that here with this sheer rise up into it, this slow descending run downwards, and then finally this all out dump to the downside, which actually could probably be dragged all the way over here. So this is the battle for Matterhorn, and it comes right here at the 1309 range here for gold, which is a price point that we have only broken out of once, and we are challenging it for a second time, in my humble opinion. So going on from this, what are all the patterns? These are all the patterns that I've seen over the last 8, 9, 10 months. First of all, we had this cup and handle here, this neckline, which actually came into play this all the way over here 7 months later, and this was actually support. So we had this cup, we ran up into another cup and handle. The previous one didn't really have a handle, unless you want to count this as the handle, but this one does have a well-defined handle. So we have this rounding bottom level. This is our neckline by this dashed dotted line here. When we broke out over it, we have this flagging action. We have a false breakdown, and then we've come back up into the pattern. Let's actually switch this over to the bars just so you can get a clearer picture of the patterns. For some reason, I find that bars are easier to identify patterns here on longer charts like the daily. I get into charts like the hourly. I like to use the Heikin-Ashi. I would highly recommend the Heikin-Ashi. It's easy to spot trends and follow it. But let's just move to this bar chart so it's easier to identify. So we have this cup and handle. This was our neckline. We broke out, and then we formed our handle. We actually broke down. This was very bearish, but we almost immediately rose back up into it. We broke out here back in mid-June here. So this is our breakout point, and unfortunately we were not able to sustain this level, and we moved sideways before finally breaking down. We formed this bear flag here as we rose up into the election. There was a lot of uncertainty. People were buying gold, and we had the election here, and we see this big spike up, and all of a sudden people realized that Trump was good for the stock market, and we had this all-out dump to the downside. We were supported by this cup and handle coming over here, and right now we are rising into what I believe may be a megaphone pattern. However, I'm skeptical of it just because megaphone patterns are fairly rare. But we have here our price rises into our A, B, C, D, and we kind of made this halfway move into E, not much conviction. This is probably a double top right here, and we fell back down, and we were getting supported here at this trend line again. So that has been my battle for Matterhorn chart. This 1309 range is going to be a key level to get over in order to see a sustained run upwards in the price of gold. Let's move from this to the 2-hour chart, and let's switch back to our Heikin-Ashi. So for this gold chart here, this 2-hour gold chart is extremely complicated, and I'm not going to cover it as in-depth as I did last week, just because I covered it in-depth last week. But essentially my theory was that we come up to this peaks right here, and this acts as our measured move as our ultimate low down here. And a second factor supporting this is that our 23.6% fib level, if we were to go from the swing high to our swing low, falls at this 26% fib level for each of these rises and falls of this pattern. So for example, if we were to take our swing low and bring it over to the swing high, we see that our 23.6 marks the bottom over here. And as a technical trader, I'm always looking for similarities in price pattern, and each of these patterns seems very similar to me. We have price rising up, stalling out, and then making a run up higher. Price stalls out, higher, stalls out, and higher. And so at this point, I had the inclination that we were going to come down to this 23.6% fib level right here, outlined in this blue or this purple box, and this 23% fib level falls right here. Let's show that. you see that our 23.6% fib level falls right there. And the second part of that, what these dotted lines and arrows represent, is that in the past, the top of this stall out pattern that we have on the left side each time, if we were to draw that from our swing low up to the top of our stall out pattern, and then take that from our highs, it gives us a good guesstimate of the ultimate lows here on the other side. So there's potential for a couple of things that might happen in gold this coming week, and it kind of comes into play with my GDX video. My GDX video, I went in very in-depth with the patterns that I'm seeing here in miners, and they also kind of go hand in hand with the pattern that I'm seeing in gold, obviously. However, there are some slight variations. However, if you haven't watched the GDX video, I would recommend it, because these, like I said, these charts kind of go hand in hand in what I'm anticipating to see. So just like in GDX, we have this overhead resistance that we have not broken out of, and I am skeptical because in the GDX video we had a 2-year support line which came up from the bottom down here. We touched D and then it supported it right here. However, I am skeptical of this rise in price of gold because we have not come down to my larger theory that this box will be our 23.6% retracement. And this kind of makes sense because, you know, if we get rejected here, we could see an ultimate low and a touch again of this lower trend line that has touched once, twice, 3 times. It would make sense for us to come down and touch it 4 times before we are supported there and ultimately make a move up higher. However, another conflicting theory right here is the potential of an Elliott wave. So we kind of have this extended one wave, 1, 2, 3, 4, 5, and our corrective wave A, B, and C. And C would mark the end of this corrective wave, and therefore this run up would be the start of our wave 1 Elliott wave impulse, 1, 2, 3, 4, 5. We also see this bullish divergence, although this is getting back to about mid next week, so I'm not sure if it's valid any longer, but we saw our oscillator making a higher low as price made it a significantly lower low. This would be what I call a exaggerated divergence. Exaggerated divergence is when, so that's on the 2-hour chart. Let's go to the 1-hour chart and see what we've got. On the 1-hour chart, and I mentioned this in my last video, I said I just wanted to ignore the spike up and stick with the 95% of the price action that I was seeing, and I was seeing this wedge pattern take place, and this wedge might be playing out here. However, I always wanted to keep in mind this overhead resistance line. However, it's hard to predict that this is an actual resistance line without this third touch here. And to be honest, both of them might be valid. This might have been a descending wedge. We might have broken out, and then we might get rejected off of this longer term, or I guess equal term, resistance line right here. Here on the 30-minute chart, we do see kind of a triple bottom take place here. We have 1, 2, 3 bottoms here, and this would mark a major resistance, or a major reversal. As far as the 30-minute goes, a major reversal being a difference of about $40. A major reversal on the 30-minute chart is going to be vastly different than a daily chart reversal pattern, but this is, a triple bottom in my opinion. But we are setting this kind of ascending wedge pattern. And so we've had our A, B, C, D, and I can see us coming up and setting our E right around here in this level of resistance. On the way down, we formed a little bit of consolidation in between this 50% level and the 61.8 Fibonacci zone. And therefore, I would predict that if we do not get rejected off of this resistance level and we break out above it, I could see us coming up in between the $1,261 gold and the $1,268 gold. That would be my price target. So after looking at the lower time frames on the hourly and the 30-minute, I'm going to go back to the 2-hour and give our final thoughts. My thoughts for trading next week are that we are either going to break out and go to this $260 range before coming back down, or we're just going to get rejected off of this resistance line and come back down to my final destination of this 23.6% fib level. I find the rejection here more promising, but either direction, I think it's a good time to think about buying gold, because the conclusion after we hit this bottom both times is that we are ultimately going to move up higher. Anyways, that has been my analysis for gold, the commodity, and I wish you the best of luck in trading next week. If you enjoyed this video, you got anything out of it, please like and subscribe. Really appreciate it. You guys have been getting a lot of support recently, and it's very encouraging. Anyways, I wish you the best of luck in trading next week, and take care.